Welcome back, everyone. It's Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management. And always, we're here to give you an update on what's going on in the markets and what we see going on out there. And also this week, we're going to be talking about Q4, the fourth quarter of 2020, what we expect, what we're starting to see, and how the year should be ending anyway. Before we get started, as always, what we cover here is for information purposes only. Do not take it as solicitation or advice on your own portfolios. Always seek professional advice. Give us a call, send us an email. You can go to mikeonmoney.com. There you can email us, phone us, book an appointment directly with me there. You can also see a host of other videos and blogs of information that can help you, or do your own full due diligence before proceeding with anything. And as always, we try to keep the information as up to date as possible. But things are constantly changing, as we'll see today. We're going to be jumping around a little bit as information is flowing quickly. And we can't even cover everything in today's session, but we'll try to get on the big topics and at least get you what we need to know to get the week going. If you have any questions, there's that button, the Q&A button. Just click on that. You can type in your question, or as I mentioned, you can go to Mike on Money and ask them there, or reach out to us in whatever your preferred format. If you're watching this on replay, just give us an email, give us a shout. Happy to answer any of your questions and help you out any way that we can. So let's look at things. I am actually so hopefully the technology is coming through okay today. I am broadcasting from Whistler so this is not a real background, obviously. It's kind of cloudy on the mountains today, but I needed a change of scenery from my little cave at home. So up here in a new cave, but some nice hiking trails anyway. So I'm up here all week, but still working. So if you have if you need to reach out, just give us a shout. We're always available. So let's see what's going on, what we're seeing coming up for this week. Well, the U.S. Existing home sales for August is due out. So it'll be interesting as we've been following kind of what's going on in the real estate market. The numbers there should actually be pretty good. We've certainly seen them do quite well here in Canada with Vancouver and Toronto area setting some records. And that's mostly driven by the low interest rates, which has been good to keep the housing market going while we're dealing with the whole COVID situation. So we should see similar numbers out of the U.S. Not a lot of reason we'd see that fluctuate too much more with the almost 0% interest rates out there. We're also waiting for the Richmond Fed Business Activity Survey for September, so just see what's going on in businesses. And the Federal Reserve Chairman, Jerome Powell, and the House Finance Service Committee Treasury Secretary, they're testifying to the committee along with Steve Mnuchin, just to give an update on the stimulus packages and also on the housing situation and the direction the feds are going. So hopefully get some new information out of that meeting. They're not always overly informative, but sometimes we do get some areas that are somewhat insightful to especially where the interest rates might be headed. Other news. So the U.S., we've been talking about the U.S. coronavirus cases had been slowly dropping for a couple weeks. Last week had flattened, and then it's gone back up this week. Really what the US has been looking for is to get the daily cases below 20,000. It never got to that, and certainly not on a stable basis. And now it's starting to creep up again. I think the latest number is 59,000 with an average death report of almost 800 a day. So things not looking good in the US. And of course, with the schools reopening, we are seeing more and more challenges there. The CDC had, if you'd been following this, the CDC in the US had put up some guidelines regarding tiny air particles and how it can spread. They removed that from their website, so not a lot of reports as to why they removed that. No, certainly I haven't seen any direct explanation in the news on that yet, so we'll be keeping an eye on their guidelines. Also in the US, of course, more and more talk about vaccines. And now keep in mind, if the vaccine does come earlier than later, it comes out under a emergency use approval. So a lot of times, some medications, in cases obviously during a pandemic, even if they're showing promising results, the FDA will give approval for emergency use only. So it doesn't mean it's available for everybody. It's in severe cases or high-risk cases. It can be used, and Medicare is basically coming out and saying they're not going to cover that cost. So if you fall under that emergency use category in the United States, you'll have to pay for it out of your own pocket. So, just further pressure on the minority and low-income workers in the United States who can't really afford their health cares. Just another wall for them to get access to the care that they need. On the financial front, LA Fitness, a big chain in the United States, has tapped its advisors to renegotiate debt. So that's its bankruptcy protection. We'll talk more about that when we talk about the fourth quarter. But we're seeing, more and more companies, of course, going into restructuring as they, with the closures and everything that they've experienced and possible new closures. They just can't make it through. So they're doing restructurings. We're seeing it in Canada. We're seeing it in the US. We're seeing it all around the world. And it's probably going to increase more and more as we proceed here, as the stimulus packages wind down a bit or get cut back. We're also seeing a rise in PTSD treatments among first responders in the US. And not surprising, if you remember back in the early outbreaks of the pandemic, especially cities like New York, where they had to use tents and refrigeration trucks to hold those who died from the virus to the massive numbers, basically war zone conditions, and a lot of the hospital workers and first responders in the city aren't trained for that, and certainly don't even always have the access to care for the type of medical help or psychological help you might need to process all that. So we're seeing that rise. So not good, especially if we head into a second wave that could potentially be as bad as the first wave. Now, the doctors are also saying that temperature isn't a great litmus test to see if you have the coronavirus, where originally that was kind of the first step. If you had a fever, pretty much go get tested, because it was a big sign that you could possibly have it. And now doctors are saying that might not be the case, especially with a lot more younger people getting it now. The largest growth of those being affected is in the, I believe it's the 20 to 30 range or 25 to 30 range. So younger people, and they're asymptomatic. They're not showing any signs of temperature. And in a lot of cases, they're not showing any symptoms. So it's not a great indicator to say whether you have it or not. So keep that in mind. Also, I didn't get on here because it didn't hit the top headlines, but of course, BC, again, we're going to the polls. We're going to an election in the fall. I believe the date was October, don't quote me on this, 26th, I believe, so just before Halloween. We'll be going into a provincial election. One thing I will mention on that was in the headlines, that in 2017, the last election, there was a total of 5,700 mail-in votes requested. So far, there's already been 20,000 requested. So if you want to do a mail-in vote, you can request that. There is a site. It's eregistered.elections.bc.gov. And a little bit more after that. We'll try to get that to you on our site or on our blog with a link. but you can certainly go to BC Elections website and should be able to find the link there as well. So with that, let's dive into what's going on in news. Bowen is gearing up to move their 787 facilities, or the construction facilities, to their South Carolina plant. So this is a cost cut, and obviously Bowen's been going through a lot of trouble, difficulties over the last couple of years, even before COVID. If you remember, of course, the Max 8 Bowen having been grounded for almost a year prior to COVID. They still haven't figured out the solution to those problems, which caused 2 planes to go down and massive deaths. And now, of course, their Dreamliner, the 787, there was some fuselage problems with the manufacturing process that some cracks have been forming. So they're doing work on that as well. And of course, with everything going on with the airlines, period, a lot of the orders are being geared back. So as a cost-cutting measure, they're looking at moving that down to their South Carolina plant, which doesn't bode well for their plants just north of Seattle, which has kind of been their premier plant pre-pandemic. And of course, all those jobs will be lost as they move that manufacturing. So just another signal of probably a surge in unemployment numbers as we head into the fall. We're also seeing, as job cuts are happening, a lot of trends in the last few years have been, of course, equality. So more women, more minorities being hired at higher rates than we potentially had saw 10 years ago. And when we look at the pilots or the airline jobs, we're seeing a lot of cutbacks. There had been a lot more female pilots hired in the last 5 years than the 5 years prior to that. But of course, with the union rules and employment rules, when they go to lay off, it's the last people hired that are first laid off or first let go. So we're seeing uneven numbers as far as those being let go, male to female, or minority, higher minorities being let go in this round, which of course is just, again, hurting the trend that we're seeing, especially in the United States. On the other front, the hedge funds see an opportunity in battered New York and San Francisco apartment market. So hedge funds are just your private money managers or private money out there dipping into areas of the markets that are heavily weighed down on because of the pandemic. This is something I mentioned earlier. One area of the market we really like is European real estate or global real estate. Definitely devalued. There's a lot of opportunities to buy in there. And if we look at what we're seeing in the U.S., New York and San Fran, it's really interesting. Actually, I've seen in the last couple of weeks some new product availability for the retail investor, kind of the average person, because a lot of times, and if you've been with me, you've heard me talk in the past, a lot of times what we've seen during dips in the market or during downsides of the market, there's always, we'll hear about Buffett making some investment. In 2008, one of the big ones he did was Bank of America. He went in and they issued just for him a special preferred share that paid 10% dividends. He bought it, at the severe dip. I think he paid $40 billion or something for the total amount. And as Bank of America recovered, he not only got his 10% dividend, but he got all the upside on the stock as well. Well, those types of purchases generally weren't available for the retail investors. So someone with an RSP, Bank of America wasn't open up the books for them to put in $10,000. But now what we're seeing in this dip is actually some closed-end opportunities. I'm talking to a few firms that are rolling them out, where people will be able to buy into the type of funds that would be able to get you into those dip financing or into those real asset purchases at very low rates or very low valuations in order to get the upside that the private money tends to take advantage of it. Of course, there are hedge funds out there that do it, but they tend to be very illiquid and very volatile. And these new ones are offering liquidity and a lot less volatility because of the diversification that they're offering. So something to keep an eye on if you're looking at doing some real assets in the portfolio. We certainly are. There's a couple of really great names out there that we're following. And when we see the timing is good, we'll probably look at adding some of that to the portfolios. Excuse me. So just to keep everyone up to date, because we have been following the TikTok story. So TikTok, as we mentioned last week, came up with a deal with Oracle to move their operations to the United States. It wasn't a direct sale, and but President Trump was still saying he was going to ban it because it wasn't a sale. Of course, there was a lot of negotiations and an 11th hour phone call. And so they do have an tentative agreement that the deal will go through. So if you're a TikTok fan, good news. If you're a fan of U.S. technologies, also good news is we're going to talk about how the China's retaliation was kind of ready to go if the ban went ahead. So other news, we've talked about and probably seen in the news a lot, about the disparity between the U.S. or in particular, we're talking about the U.S. here, about the workers who are being affected by the unemployment and the closures versus the wealthy, right? The 1%, they're often called in the U.S. And what we've seen is a lot of the government stimulus packages have been geared towards the wealthy. So, and that has driven the markets back too quickly. We've talked about the disparity between the actual economy and the market performance. And what we've now seen is the U.S. wealth, so that 1%, their wealth numbers have recovered, right? They're back to where they were pre-pandemic levels, which is good for them. But of course, on the flip side, that's not great, because now what it's highlighting is, of course, the stimulus packages, one, and two, the focus has been on that 1%, but there's the rest of the people, which really drives the economy. So if we want to see a real economic recovery, whether it's the Fed or anywhere else, the U.S. or anywhere else, we need to shore up the problems in the economy for the average worker. Not everyone has $1 million or $1 billion portfolio for it to recover. So those numbers coming out do highlight the problem that we're seeing down there. We're going to keep a very close eye on it. Tiffany's and Louis Vuitton are in court. So we mentioned this earlier on in the pandemic. So prior to the closures, Louis Vuitton had a merger agreement with Tiffany's. And of course, after we would go into shutdown, valuations changed dramatically in both companies. And Louis Vuitton wants to back out of the merger as is anyway. They might be willing to look at it in a less generous package or a different valuation, but at the $16 billion takeover price, they want to back out. So Tiffany's is, of course, suing because they want to hold them to that price. So the reality of this, if you don't own either stock, no one's really too worried about Tiffany's and Louis Vuitton as to who's mad at who. So, but what I wanted to highlight there is really, we're going to see a lot of this. In fact, we're just seeing it now with Bombardier, our own Canadian, who had an agreement to sell off part of their aerostructure business. And so that's now in question. So any pre-pandemic merger or buyout is going to come into question, because those valuations have likely changed dramatically. So the new ones that we're seeing coming through, are going to be on solid ground because they're going to be based on current valuations. But the older ones, of course, are probably going to be, for the most part, challenged. And here's what we're talking about, the Chinese leaders' retaliation on the TikTok or the technology, because, of course, there's still the Huawei issue. with the U.S. and also the current U.S. government has put some restrictions on microchips being manufactured out of China. So the Chinese leaders have basically made a blacklist of American technology firms that they want to block or put restrictions on. And now they're hesitating. There's an argument within the Chinese government about whether they release that yet. Obviously, a lot of that was pending on the TikTok situation. But also they're waiting to see what happens with the potentially waiting to see what happens with the election, in the sense of if Trump doesn't win, they might back this off, as they think that they might have better relations with a Democratic government. So we'll continuously following that. It could mean some real damage for some some U.S. tech firms operating or selling into China. So it'll be interesting to keep an eye on it. And of course, with the rates, they're still talking about the rates being low for a couple more years. And this is going to be a battle between inflation and interest rates. Traditionally, interest rates go up to protect against inflationary accruals. But at the same time, raising interest rates does slow the economy because people can't afford to borrow as much. Can't afford to buy, slows down spending, it slows down corporate expansion, et cetera, et cetera. So the goal is, certainly the signaled goal that we're seeing out of the U.S. is for the interest rates to stay low for a couple more years. But it really is going to be driven by where interest rates might be headed. Microsoft, who was in the running for TikTok, just on the heels of that deal falling through, they went out and bought, if you follow video games at all, if you're a gamer yourself, Doom, which is owned by ZeniMax and Bethesda Software Works, which is the developer, for $7.5 billion. So this is a big deal in the video space, or the gaming space. And it's right on the cusp of the holiday season, where, of course, Microsoft and Sony are going to be launching their new Xbox and PlayStation consoles, which is a big driver of their annual sales, not just on those consoles, but of course, new consoles means new games to be sold. So it's a big expansion for them to have those names under their umbrella. So, and that comes right after as well, Microsoft posting some great numbers on their earnings. So as we've been talking about, Microsoft and Apple both doing exceptionally well through the pandemic, and expected to continue to do that as more and more people rely on technology, and not just the softwares, but on the hardwares to work from home or to access the services that we're currently using online now. Here's a story, this is not, really surprised, but, actual example, laid off workers are cutting spending. And this is on the heels of course, of not just US, but Canada as well, as we see the stimulus packages wind down. In the US, the extra $600 a week that they were getting for unemployment benefits is being dialed back. And in Canada, the CERB is being rolled over into the unemployment in October here. And basically workers who were already, dipping into, workers who could not find full-time work or replace work that they had, who had already been dipping into savings, are now losing those extra benefits. And they're almost at a depleted savings. So that means, moving their purchasing to essentials. So we've talked about different areas of that, the grocery stores versus, restaurants doing better. Just as the restaurants are reopening now, there's still all those unemployed people won't be able to go out as much, or if at all. And in one of our previous videos where we've talked about kind of top areas to look at, we've named, Dollarama being an area. And that's where we're seeing a lot of people turn to the kind of discount stores to find, their essentials, whether it's toilet papers, pasta, cleaning products. Even the general grocery stores might be a little too pricey for people who are really on the slim budgets. And of course, cutting really back on the restaurant and the takeout foods. So, just as restaurants are reopened and trying to find their feet again, they could be hit pretty hard with a second wave of not even virus, but a second wave of lack of customers as people stay home. And of course, if you follow any politics at all in the U.S., Ginsburg, RGB, or RBG, sorry, passed away from cancer in this last week, and the controversy is running wild over Trump to name a third Supreme Court in the last 4 years. So his nomination, I think he's saying he's going to have it out by Saturday. There's a few names flying around. And this, the big controversy here is, of course, in Obama, 8 months before his, this would be 8 months before the 2016 election, the Republican-led Senate barred his nominee to the Supreme Court, saying it was too close to an election, and that it should be decided by the people who vote. So if they vote Trump, then his goes in. If they vote Biden, it should be the Democrats who get to pick the next Supreme Court judge. So just recent history, as I mentioned, just in 2016, the Republicans were banging the table saying that a sitting president who had an election within that year should not be able to push forward a nominee. And now the Republicans are saying they are going to push forward a nominee in a very short period of time, obviously with the election coming up. So a lot of controversy around that. I don't think we've seen the end of it, and we'll keep a close eye on it. And the numbers that we're seeing around the world continue to rise up. The latest number I looked at, this is from yesterday. I think the total deaths globally is 970,000. The U.S., of course, has broken through the 200,000 mark, and Canada over the 9,200 mark, as we see some fall surging, not just in BC, but Ontario and Quebec posting some of the highest numbers in Canada. Concerning. Canada's still doing well. The good news is the number of cases are going up, but the hospitalization rate is not increasing as much. So that is positive, but it's still spreading pretty strongly here in Canada as well. So let's take a look at the markets. We did see the markets fall a little bit. So this is the continued trend we've seen since kind of September 1. We talked about that. That's, we did see a really big rise up in the markets. They got to new highs in the US, Canada testing some new highs. A lot of that on stimulus, a lot of that on news of the vaccine. And as we got into September, some of that reality started to set in. We still have very high double-digit almost numbers in unemployment. We still have in Canada the oil production sector basically closed down, operating at minimal levels, and no real sign of demand returning for oil and gas or the energy sector. So really difficult for that to stimulate our economy, which is a big part of our economy. Now we are shifting. We've talked to, of course, the government putting a lot of fund in, and even the companies putting a lot of money into renewable and alternative energies as part of the recovery packages. But that's spending, that's not revenue. And hopefully that spending leads to revenue down the road. But we're not seeing a big recovery there for Canada. And of course, the US, those numbers never really got great on the pandemic control. We did see an initial surge of some rehiring, but now all indications are showing that the unemployment numbers are probably going to get worse, start to backpedal a little bit or get worse, as we're seeing more closures, we're seeing more bankruptcies, we're just seeing more layoffs happening as business has not returned to that normal, right? We hear that all the time, the new normal. That doesn't mean all doom and gloom. We've talked about these every week. There are some great new areas we've covered in full videos of different areas in the economy that we think are growing quickly. They're going to be kind of the new, call it the new way of doing things, the new normal. A lot of opportunity coming through that area for growth and jobs, but there's just that timing of disconnect, right? As people get laid off from the old jobs versus being able to get trained and get into the new job. So there is that transition period, and we'll talk a little bit more about that at the end. As we mentioned, the Fed chair is going to be talking to the House committee this week, just to give some insights as to where they see the direction going. We'll keep that on the radar. Tesla, and Elon Musk's Battery Day, International Battery Day. He's talking about showcasing the advances they've made in battery technology and what that can mean. He's of course pushing for not the abolishment, but getting rid of the combustion vehicle and moving to electric as a standard. We're also seeing, just outside of Elon's world, but we're also seeing a big push into the hydrogen cars again. Toyota's coming out with a model kind of equivalent to your Camry, Corolla, an affordable mid-sized car. And more we're seeing the hydrogen kind of making its way back as more stations are actually starting to carry it to be able to fill up. So anyway, Tesla's pushing that. Battery technologies, of course, at the forefront of electric vehicles, always pushing for more intelligent software, which makes the energy use more effective and increasing that driving range. So, how far that they can travel. Nike, we've talked about a little bit through all this background, how they were doing quite well. The latest quarter profits, revenue were down a little bit than expected. But we also mentioned that's due to a lot of extra costs that they're incurring, of course, shipping. I still think it's good in the sense that they did move to or online purchases really early, so they've kept the sales up. They did see a little bit weaker back to school numbers than expected, not surprising with all the controversy around the back to school situation. Also top news, Nikola talking about electric cars. If you followed this story, Nikola is a competitor. It's a startup competitor to Tesla. There's been a lot of controversy around this, around fraud concerns. We've just seen their executive chair resign over some of those allegations. And that's on the heels of their stock kind of having a big uptick after GM put a big investment into them as to get access to some of that technology. So we'll keep an eye on that. I do think it's an interesting story. They have some really interesting vehicles. They've been focusing, as opposed to the sports car or the smaller car, they've been focusing on kind of the electric trucks. So they have the Badger, which is a pickup truck, which, on paper looks really great, hasn't delivered yet. And now with all these concerns over what they're going to deliver and if they actually can, we'll keep an eye on that. But I do think it's an interesting story. We already talked about Microsoft buying Doom. Illumina is buying Jeff Bezos' back cancer treatment. So this is a cancer treatment company that Bezos or Amazon had spun out about 4 years ago to a separate business. Now he's selling off to Illumina for $8 billion. So more money into Bezos' pocket, the richest man in the world. So good for him. And Tesla, as we mentioned, Musk out there pitching the new batteries that they're developing. In Canada, no major scheduled events. Obviously, as I mentioned, didn't hit the headlines. Of course, the BC elections. We do have the Crown speech coming up, which would be interesting to hear Trudeau kind of with his insights and where he sees things coming up as far as government policies go. TransCanada Pipeline, or TC Energy as it's now known, has got a new CEO. So pretty smooth transition, no concerns there. Kinross Gold CEO, so this gold company. So always keep in mind, if we've talked about gold being a good place to be or for a piece of your portfolio, these days, just because it's a great hedge against inflation. But do keep in mind, which is why I really like the ETFs, which kind of track a basket. A basket of gold companies. XGD is one of my favorite ones, because there's a lot of gold is mined in foreign countries, and sometimes politically, not always politically stable countries. Here's an example where Kinross has big expansion plans for their Mali, which is just north of a very unpolitically safe concern for them. They're saying there's not going to be an issue. But something to keep in mind, keep and watch Kinross in particular, but any gold company you're looking at. And if you bank with RBC, you lost connection for technical issues for their online banking, their trade, and even their phone line support system all went down. So one of the downsides of all this technology we rely on, if it stops working, it can be a problem. So RBC was scrambling to get that all back up, and hopefully everything's running for the customers. On the exchange front, the U.S. dollar actually uptick after months of decline, and this goes back to the trend. So when we talk about trends, whenever there's weakness in the market, there's always going to be an uptick or a push on the U.S. dollar, and it's seen as the international currency. It's seen as the safe play. So global money will move into to the U.S. dollar and out of other currencies. And of course, we're seeing a decline in the euro at the same time, as that was an investment play. They reverse trend to go to safety when concerns start to come up around the market. So we do still see a longer term trend with downward pressure on the U.S. dollar, but as we go into short-term trend of negative markets or negative concerns around the markets, you see that flight to safety into the U.S. dollar. So that, not surprising, we're seeing a bit of uptick there. The Canadian dollar holding in tightly. Sterling, the pound, which is another big currency we watch very closely, fell again, and that's. We've got Brexit still going on, so a lot of pressures there. On the commodity front, oil clawed back after a big drop, so no real strong upward movement. The numbers are still bad. We're still seeing excess supply around the world. Even though we saw a drop in the inventories, we still have a massive excess around the world, and some countries overproducing. To their agreement with OPEC or OPEC plus to keep supplies low. Gold stabilized a bit after a bit of a pullback, so a pullback down to I believe June numbers. No concern there. In fact, if you haven't got it into your portfolio, you want to add it. It's a good buy-in point. As I mentioned, a bit of your portfolio. We're currently sitting about 3% exposure to gold, so not a massive bet on gold, but certainly a hedge against that inflation pressure. So if you want to jump in, it's a nice mark to jump in on, as we've seen a bit of a pullback there. So let's talk fall or fourth quarter 2020 and what we should see and what the economy and market should act like. So if you've been following these weeklies, no surprise of kind of my view and where we see things going is the markets have been jumped way ahead of the economy. So we see a pullback. No, we're not talking crash. We're not talking depression. The US and Canada are definitely in recessions. Around the world, economies are under pressure from the closures. So the one big unknown is to how much the pullback is going to happen. And the big driver here is going to actually, it's one of the things that people have control of, because it will be driven by whether we have a big second wave in the virus. So if we have to go back to closures again, if we have to shut down again, of course, it's going to be a bigger pullback, because, a lot of that recoveries that we have seen is going to get taken away. Unemployment numbers are going to surge, not just creep back up. Like, we fully are expecting unemployment numbers to creep back up. But if we go to massive closures again, we're going to see those unemployment numbers shock back up again. We'll see massive drops in the GDPs again. We're already expecting, Canada, we're already expecting about 11% drop in the fourth quarter in the GDP, just due to further slowdowns. Even here in BC, which we fared fairly well, the numbers are increasing. Of course, one of the gauges that we follow, closely is retail and the restaurants, and all the nightclubs are closed down again. The bars and restaurants can't serve past 10 o'clock again. And even those measures are now under review of being scaled back even further. So harder and harder for those areas to recover, and they hire a lot of people. And as they're already slowing down, they haven't hired back the same number of staff as they had before, and they're potentially closing down or limiting even further staff if they have to shut down more hours or close. If we go to a full closure again and just go back to the takeout models. So, and we're seeing the same on retail. More and more big chains are closing bigger stores, or the number of stores that they have open. Fewer staff, we're seeing fewer shoppers out there. So not doom and gloom. Again, this is just a transition period. Our portfolios are well positioned for this. I see this as an opportunity from an investor standpoint. But what does that mean for the economy? So if we do go into a second wave, obviously the economy is going to be hurt, and that's going to draw out that real recovery into the new year. If we don't go into the second wave, we are still expecting that pullback. We are still expecting more layoffs, and mostly driven by delay. The stimulus package has delayed some companies from closing their doors, or maybe reducing staff because they were, through government funding, they were able to keep the staff on, or they were able to keep the doors open. And that's why we're seeing more and more bankruptcies coming now in September, and we'll definitely see more in October, is because right away when this all hit in March and April and May, there was a lot of money thrown at keeping companies open. And some of those will have survived, which is great. That's what that money was there for. That's what we wanted to see. But some of them were already kind of on that tipping point. The extra money gave them a lifeline for a little bit of time, but they're not going to come out of that. And we're going to see a lot of that happen. So that's going to drive the unemployment numbers up. That's going to keep the economy slow. And of course, the markets are starting to realize they got ahead of the economy, and it's going to pull back. That's a buying opportunity. It's to re-enter or top up positions that we already have, that we think or that we know have performed well through this, and will continue to grow by implementing new strategies and new investment opportunities, even for companies. We've seen massive shifts in different industries. We've talked about the restaurants shifting to these meal kits and online being more profitable than in restaurant clientele. The fitness world has changed. Of course, all the gyms shut down. A lot of them went bankrupt. Fitness World, or Steve Nash, which was a big one here in BC, went bankrupt almost right out of the gate when things shut down. They were obviously on the tipping point beforehand. They didn't last long. LA Fitness, we just talked about, big chain in the US. And now what we've seen is that shift. So the Peloton model, which their company has done extremely well through this, which is the home fitness, the home videos that brings the trainers right into your home, and if you buy the equipment as well, the equipment right into your home. Well, we mentioned last week Apple, who's dove into Apple Fitness now. So they're going to be offering that in-home fitness model. And now Amazon, I believe this morning or yesterday afternoon, launching the Prime bike. So it's a direct competitor to the Peloton. So it's the same idea. If you're an Amazon Prime subscriber, you can get the fitness videos. You can have the bike or equipment and all the gadgets in your home. So that whole gym model, or going to the gym model, is shifted to the home. So that's an example of new growth happening, new opportunity. Companies getting new revenue streams and growing the revenue even with the shutdown. So there is that opportunity. I don't want to, and we're seeing that in a lot of industries. I don't want to paint a bleak picture. So what do we mean? What do we see for the economy? Obviously, so the Christmas spending. So there's actually going to be two things you're going to see for the holiday season is obviously unemployment going up, total spending is going to be down. So when we talk about retail, not good, especially the physical retail stores. If we do have a second wave or people continue to be concerned, it's going to keep people away. We're going to see a surge of online buying. This trend is not new. Last year's e-commerce numbers were the highest that they've ever been. That doesn't mean that all was done online. Last year, pre-pandemic, a lot of it, the numbers were still in stores, but we're going to probably see a really big surge to the e-spending for the holiday season. So the total spending is going to be lower, but the e-spending is going to benefit a lot, while the most of the losses are going to happen as you're in your physical retail chains. So look to shift your investments to make sure you're not in those physical spaces, but taking advantage of those who are best positioned for the online. We've talked about Shopify and Amazon. I'm sorry, I was going to say I'm not a fan. I do think they're great companies. I think they're overly priced. That doesn't mean that they're not going to go up higher. They will continue to see growth. They will continue to do well. For my best bang for the buck that I see, as we've talked about before, is the PayPal, Visa, MasterCard. Amex is in that group as well. Not as a big player, and American Express owns their own debt. So if people don't pay off their cards, they suffer that loss, where the other three don't. Of course, those other three just take transaction fees. So more and more people who are buying online have to use those methods of payment. So really like those areas for the holiday season spending. But any retailer or any online business that is well positioned will be a good buy. The other big talk that we see these days is everyone's on pins and needles about the vaccine. So I stick to the science. I try to keep the politics out of it. And if you follow scientists, I'm obviously not a scientist or expert, but from what I've read and researched, the vaccine's not coming anytime soon. As I mentioned earlier, we might see that emergency use vaccine for certain groups. And then, of course, when the vaccine is finally approved for general distribution, it's going to be in stages. So very, very unlikely we'll see it in this fall. In fact, the head of the CDC in the US in front of the Congress just last week said, second or third quarter 2021 for general distribution, access for everybody, basically. That was that was countered by the president afterwards, after he did his statement saying, no, it would be in the fall for everybody. But even those, as I said, all the scientists involved, kind of impossible on an emergency use approval, even if we have it, because the emergency use approval is not there yet. So anyway, so that's just a bit on the vaccine. So as far as investing in the drug companies, I would focus on the distribution companies, kind of your Johnson and Johnsons of the world. Just because someone has developed a vaccine doesn't mean that they have the channels or abilities to get it distributed, and that's where Johnson & Johnson tends to do that for royalties. It's great investments, and again, focusing on whether it's the dollar stores where people are trying to get the cheaper product, but if you want to go really general, Procter & Gamble. Read any product, almost any product you have in your house when it comes to cleaners, toothpaste, cookies, paper towel, toilet paper, all that. It's all, Procter & Gamble makes and distributes it. So a great way to play a slower quarter for the end of 2020. So keep in mind that pullback's a great opportunity. We were definitely already started, as I mentioned, start of September. We've pretty much seen declines in the markets. We've seen tech pull back in certain areas. Be careful with your tech investments. Make sure they're the ones that are real and that are going to be there for a while. There's a lot of new startups. There's a lot of people trying to use those taglines of being technology based and to try to get their stock prices boosted when really there's not a lot of revenue or fundamentals behind them. So stick to the solid names, the ones who are going to be at the forefront. If we do see a pullback in some of those good names, that's a buy opportunity. But with that, I'll leave it. As always, if you have any questions, give me a call or go to mikeonmoney.com. Oh, and later tomorrow, we're going to be putting out a video specifically for U.S. persons. So definitely if you're a U.S. citizen living in Canada, but a U.S. person can be anyone who owns real estate in the U.S., rents or has any kind of revenue out of the United States, or not this year, but normally travels quite a bit to the United States. We're going to be talking about all the pitfalls to try to avoid for 2021 around your taxes, how to keep IRS off your back, and make sure you don't fall into the IRS radar. So we're going to do a deep dive with CI investments into all that. Tomorrow we'll have the video out, and that'll be there for replay if it's something that you want to watch. So thank you very much. I know I've gone long today, but it's a lot of news out there to cover. So if you have any more questions or you just want to chat, reach out to us. Happy to talk and give you any kind of update or insights to your personal situation. With that, take care. Talk soon.